Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price kicked off the week with a bang, approaching the 2,000 per ounce point once again as safe haven demand intensified. Market watchers have attributed the yellow metal's Monday jump to factors like a ramp-up in the war between Russia and Ukraine, COVID-19 restrictions in China, and of course, ever-present inflation concerns. Despite those upward drivers, it wasn't long before gold pulled back, dropping to levels not seen for about 2 weeks. The precious metal was just above $19.50 when this video was recorded on Thursday, after spending time as low as $19.39 midweek. Despite its fall later in the week, gold remains historically high, and the general consensus is that more price growth is coming. What's been frustrating for some investors is the performance of gold equities, which have not seen as much momentum as might be expected. I heard recently from two experts with different perspectives on how to approach the space. Maria Smirnova of Sprott Asset Management said that although larger cap gold stocks have been doing well, the best possibilities lie in explorers and small to mid-sized producers. Conversely, she cautioned that inflation is causing problems for developers, which are having to deal with higher capex, among other issues. John Feneck of Feneck Consulting has honed in on an even smaller range of companies, focusing on mid, small, and microcap gold stocks. He mentioned Thunder Mountain Gold and Idaho Champion Gold Mines as players that he likes. Here's how John explained his approach.
There's been a huge disconnect with the gold equities and the price of gold. And that's why we're buying gold equities like the ones I named, which are completely bombed out and are completely misunderstood with no analyst coverage. Love it. You know, that's exactly what we want. We want to buy something before anyone else has figured out that part of the world. So it's less interesting for me to be buying Newmont right now because you can see big money got into this stock starting in December of last year. That was the first mining stock of size to really rally. So we hand that off to someone else, on a rally because we want to deploy that capital into names like the ones I mentioned that are so bombed out that, if something goes from 8 cents to 12 cents, we make a huge percentage move.
With gold stocks in mind, we asked our Twitter followers this week how the gold companies in their portfolios have been performing. The poll was ongoing at the time this video was recorded, but respondents were split fairly evenly between positively, neutrally, and negatively. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. I want to close out this week's video with a quick note on INN's Q1 content. At the end of every quarter, our reporters reach out to experts in the many industries we cover. They then compile the information these market watchers share to give our audience a look at the past quarter and what's ahead. This week, we published quarterly reviews for a slew of topics, including favorites such as gold, silver, lithium, and uranium. I really recommend checking out this content if you want to find out what's in store from commentators at Sprott Asset Management, the World Gold Council, Benchmark Mineral Intelligence, and more. I'll leave the links for you below. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.